It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Monday evening, April 4th, 2016. We have another exciting newsletter in store for you tonight. I've got crude, S&P, gold, and euro. Today was Reaction Monday, which is the first trading day after last Friday's non-farm payroll report. All eyes were on the energy markets and the equity markets today, while gold and currencies seem to take a bit of a pause ahead of some highly anticipated FOMC meeting minutes news later on this week. Crude oil is bearish and aggressively, I would say, blowing through some major key levels of support as it overshoots the low of a multi-day channel. This tells us we're looking for a short-term correction really before we do anything tomorrow on the oil market. Just things took off to the downside, continue its move from last Friday. E-mini S&P, the E-mini S&P is bearish, and a wedge on the chart tonight tells us there's a lot of room to the downside, but we're sitting at some key support. We'll be looking to see a trap high for the most reliable trades tomorrow. We would love to get a fake break high, something off of these lows. I'll tell you though, it feels like there's a big old bullseye on that low for the S&P for tomorrow and a ton of room to go lower. Wait till you guys see the chart on that in a moment. Gold is range bound. How can we forget about the yellow metal? Gold is range bound at the lows with a short-term bearish bias this evening. This tells us to look for failures to buy the lows, but we need to wait for the sellers to try and fail first. It might be a grinder on the gold for tomorrow. And the euro is behaving very, very well. Perfectly range bound inside a triangle this evening, tells us to look for failures at the highs and lows of the range and wait for the completion of the triangle for a new trend direction. We might be seeing this euro get all coiled up ahead of a big move tomorrow. Got a great plan here tonight. Before we jump into charts, I want to remind you the only place to watch the full-length version of this nightly newsletter is over here in our trading vlog at sidewaysmarkets.com. If you're watching this video right now on our YouTube channel, this is only a small portion of the full-length version. There's a link in the description of the YouTube video. Follow that link. Come join me over here at sidewaysmarkets.com. This is where all the goods are at this evening. While you're here watching the video, don't forget, grab your free pass. Come out and join me as a guest in the trade room. Lower left-hand corner, you can grab, or should I say register as a member of our nightly newsletter mailing list. All I need is your name, your email address, and then check your inbox. I'm going to send you a verification email to make sure you got that from me to give me approval to keep sending emails every night when the nightly newsletter goes live. Right below the video tonight, you can see a spot to download all the charts. How nice is that, right? How easy is that? All the charts you see me using tonight's video, you can download them right below by following that link. And then, of course, over on the right-hand side, you can become a trial member, right? Read all kinds more information about what it means to be a student here. And, of course, don't forget, I've always got someone standing by 24/7, 365 to give you guys a hand with any of your trading questions. Getting ready for another big week ahead of us. Full week ahead of us, guys. Got a full month ahead of us here right now. Check the economic news calendar here for tomorrow. What's our schedule look like tomorrow for Tuesday, April the 5th? We've got international trade at 8:30, the JOLTS report, job openings, layoffs, and transfer survey. My gal Yellen, that's her favorite news report. And, of course, we got the ISM manufacturing following it up at 10 o'clock. Boy, international trade, pretty big deal right now, right? That strong dollar has been plaguing the global economy. And JOLTS, right? Who doesn't love a good JOLTS report? We got two big news reports tomorrow morning, 8:30 a.m. and 10 a.m. Always love to see news at the beginning and the end of the day, right? It gives us, or the end of the morning, I should say. It gives us a good shot in the arm early in the session, a little bit of caffeine early in the session, and then some JOLTS report to get things moving. Going into the lunchtime session, 8:30 a.m., 10 a.m. Don't forget, we do not trade news. Although there may be more volume, there is no liquidity during news events. Careful, careful, careful. We always trade around the news, and of course, you can assume I'll teach you guys how to do that here at School of Trade. Let's keep going. Starting out here with the oil. Then, of course, we go down to S&P, gold, and the euro. Jeez Louise, this thing is on a tear to the downside. Crude oil is bearish and aggressively moving through these levels of support as it overshoots the low of a multi-day channel. This tells us to look for a short-term bullish correction before we do really anything tomorrow. We got to be careful right now. We have a bear channel and a measured move on the chart this evening. There are two bear channels on the chart. First of all, we have a multi-day bear channel. You got to go all the way back to Wednesday, right? The kind of the climax was on Wednesday before inventories last Wednesday took this thing lower. We closed right at smack at the lows on Friday after non-farms, and this thing almost made a measured move up to that high. As you can see, though, we get an undershoot of that channel high, and we're getting all we bargained for into an overshoot at that low. Overshoot at the low. It's tough to be a seller down here. You know, you're not going to hear me say the word oversold. You're never going to hear me say it can't go any further. But you will hear me say reliability, right? I have no right to tell the market what it should do next, right? And neither can you. We of course, as we all learn in day trading 101, the market, right? The market can be irrational a lot longer than I can be solvent. So what I can't do right now is say we got to buy this because we can't buy this right now, right? You buy this right now, you're buying into a bearish market, and you're just asking to lose money this way. What I do know though is that the most reliable trades are going to be to sell the high of a major bear channel, right? That's where the most reliable trades are going to come. So trying to sell the low of a major bear channel, probably not where the most reliable trades are going to be. With that said, we also have that short-term bear channel. And this short-term bear channel tells us that we might just get some opportunities tomorrow to sell before we get this price to rotate all the way back up. I mean, let's be honest. Looking at this chart this evening, there's not a lot of confidence for the bulls right now, right? We're going to have to wait and see if these bulls, right, can put on the big boy pants tomorrow and get this thing up off those lows. Now, if you're a student of mine, we talk about market inertia, right? We talk about market inertia and how a market that is in motion usually stays in motion, right? Body in motion stays in motion. That's why it's so important that we don't try to call reversals and that we look to follow the trend. As you can see here, we literally have one move off that low since what? Mid to late morning this morning, right? So we're expecting this to want to go 2 legs down. If you're a seller and you don't want to wait for this price to rotate all the way back up, this type of move is going to be difficult to slow down. What that means is you can expect sellers are going to keep trying to send this price lower. Okay, that's the good news if you want to be a seller in the short term. The bad news is you put that into context of where we are right now, and just selling, it's tough. It's difficult for me to tell you to be a seller at this area right now. As you can see here, we have the measured move coming down. AB equals CD, or as I said earlier, what measured move? You know you're in a bearish market when it says, no, this measured move isn't support, it's resistance. Who are you kidding right now? They literally torch right through it and then use it as resistance on the other side. I would say, again, very difficult for me to say, don't be a seller on this market right now. And everything right now points to a triple measured move and a triple down, right? We got the measured move down. We got the double down. But again, does it look like anybody took their profit there? Does it look like anybody had any goal of getting out of that? No, it didn't. In fact, it looked like they used it on the opposite side as resistance. So at this point, there's a big bullseye right now on that 35, 35.08, 35.05. But how are we going to get into this type of stuff, right? That's the hard part. Selling retracements, and again, I start to stutter when I say oversold, right? I don't even want to say that word because the market's going to do what it wants to do. So where's the most reliable trades tomorrow? When you have a market that is in a very cheap, possibly oversold environment, what you want to look for is look for opportunities to catch traders sleeping, right? Look for traps. So overhead resistance, I'm looking for some profit taking, get back above resistance, buyers fail. You know what we always say in the newsletter, right? Failure into strength, strength into continuation, and then back down to that low. So what we're going to be looking for tonight in the Asian session, tomorrow in London, and of course tomorrow, we open up our trade room at 8 o'clock, is we're looking for something here, and we may not see it on this chart. We're looking for something here that allows us, right, for a trap low or trap high. Buyers try to buy the pullback. If they're successful, they're going to make their run, right? If they're not successful, though, that's where we can expect to see those selling opportunities coming right back in. Remember, as this price corrects higher, And again, guys, I'd be lying to you if I said I knew where it was going to correct higher to. This is an extremely bearish market right now with a big bullseye down here at 35.08, 35.05, 35 even. Okay, what we do know though is we're in a difficult area to be a seller right now, right? The reliability is low here at this area. So what you want to remember is whether it be short term or long term, we're looking for areas of resistance. But there's not much to work with. Right, I've got that 35.85, which wouldn't that be just wonderful? But they're probably not going to make it that easy on us. And the last thing I want to do is watch this thing continue to melt down tomorrow without making something off it. But again, we have to be careful. Don't sell low. We want to sell high. So during the correction, and again, don't take this as price levels, but assume here we have, right, that bullish correction. You're looking for buyers to try to hold that pullback, and if they're successful at holding that pullback, then we know, look for that measured move, right? And that's going to be your measured correction before we then look for the next level. What we're looking for, though, is looking for those short-term opportunities here where the buyers can't hold that pullback. You know where their stops are going to be, right? The stops will be right there. All you do now is wait for that failure into strength, strength into continuations, continuations back down to that low. Okay, the hard part tomorrow is going to be if and when it comes up off this low, waiting for those buyers to fail, right? And then, of course, looking to sell into those buyers' failures because that's where the easy money's. That's where the most reliable trade is going to be here in this really strong sell-off. Now, what if you're a contrarian? What if you want to be a buyer here in this market? If you're going to be a buyer, I hope your insurance policy is up to date, right? I hope your will is all drawn up. Wear a helmet, right? Wear a helmet tomorrow. But if you want to be a buyer on this, you know what you're waiting for, right? You've got to get that price to hold a pullback. You've got to get it now, new higher high, and then hold the pullback. If we hold the pullback, now we have reason to believe that we're looking for that two-legged move back up, right? Again, look for those moves back up to resistance. Obviously, the ideal scenario for the buyers is to get it all the way back to the high of that channel, but we're going to have to take a look at that tomorrow morning live in real time because right now, there's just nothing we can tell about it. So again, looking for the sell side right now, what's the one thing that's going to happen tomorrow that won't keep me selling? What's the one thing? I just said it. All right, I'm gonna quiz you on this in the video. What's the one thing tomorrow that's going to keep me from selling? If the buyers hold the pullback, you're exactly right. New higher high, buyers hold pullback, then you know the buyers have short-term control. I'm not saying they're going to go all the way back to the high. I'm just saying if they can hold a pullback here, right, you got to give them the respect. Okay, got to give them the respect, and we'll look for a move back up to some of these resistance areas overhead. And if we do get the gift from the trading gods, right, we'll love to get it back to the high and then sell it back down here. We'll see what happens. I'll be looking at this market tomorrow morning at 8 a.m. Follow the plan, Stan. Let's keep going. Ooh, boy. This S&P looks cold. It's cold out there in the equity markets right now. Boy, I thought that jobs report was going to give the shot in the arm here right now. Now, again, this might be, this might be a deep pullback here. It definitely might be. Let's be honest here, right? We're about what? We're almost down to that 50% area, right? Give or take here. So this might just be a deep pullback here before this market goes higher. But as of right now, though, it's not looking that great here for this turnaround, at least not at this moment right now. Here's what we're seeing right now. And again, now that you know what to do on crude, you know that if the buyers do pull this thing around, new higher high, hold that pullback, then you know, right? You know what's going on. But as of right now, though, this market is just like crude. It feels like there is a bullseye at the low of day right now. E-mini S&P is bearish, and a wedge on the chart tonight tells us there is a lot of room to the downside, but we're sitting at key support, so we will be looking for a trap high for the most reliable trades tomorrow. Very similar to what we just talked about on crude. What's the direction? It's clear. It's obvious. Right? If you say anything but bearish right now, I'm questioning your vision, right? Because this is clearly a bearish market. Lower lows, lower highs. Every time the market got above the moving average, right, it says, no. Who are you kidding, right? It's bearish. Can't hold any pullbacks right now. Until the buyers hold a pullback, we have to treat this as a bearish market, whether we think it is or not. The proof is on the chart. That's all we need to worry about. We get a bear wedge and a measured move on the chart this evening. These are pretty easy charts you can see here. The bear wedge tells us the sellers will be hunting for that finishing point, which is all the way down at 2042. And the last time I checked, Ooh, that's right about where we came from yesterday.